Fellow traders, Gary Wagner here, 12 noon in Honolulu, Tuesday the 20th day of December. And this is the daily report for gold and silver. We have had a nice showing, moderately higher across the board in the precious metals markets. Actually, stock market, beautiful rally in that. Commodities as a whole, up. We'll talk about all of that through the report. To the board, we have silver. That is currently trading up about 2.5% higher, up about 76 cents on the day. As you can see, we have cash gold, $29.62. We also have March trading at $29.53. That's the COMEX contract. In the gold market, up about $21 or 1.33% higher on the day. 16.15, 16.16 ask bid spread. That would be your cash market, of course. Most active Feb gold currently trading at 16.1750. Very, very interesting day. First chart that I want to take a look at this morning is going to be our daily chart. This daily chart is in Japanese average format. And the reason for us starting with this chart, if you recall, over the last couple of days, we've talked about the fact that the average charts are great indicators of trend, but they are also a lagging indicator, meaning when we first issued our buy signal, this was back around 1588 when we got long in the market. If you recall, we looked at a 360 because we saw a turning point there on the Henkin Ashis, but no turning point on the daily charts. They lag, they'll take a little bit of time. If you take a look now at these last two candles coming in, we are seeing that turnaround. We have actually gone to green. And so that is significant in that the pivot point we were looking at turned out to be correct. You can see that, and it is a nice showing on the market itself. We'll come back to this chart in a second as we talk about certain targets. When we take a look at, this was the chart that I sent out the other day, and I talked about the fact as this market came back down, of course, we had this nice rally here from the bottom, 1560. As this market came back down here, this is really where I sent the chart out, somewhere right in this area. And my sentiment was that we'll probably get the market taking us up to about 1630, and then we will get some sort of subwave within there before, if we're going to get a 5 count, our final push up for the end of this particular wave, which is an intermediate 4. As you can see here, we're currently 1615. As I said, my target on this is going to be anywhere between 1620 and 1640 to look to see if the market's going to begin to correct there. Because if in fact this is an intermediate 4, it should, in terms of the actual distance it moves, we're going to compare that to the wave that came just before that. Now, some of the other markets that we have been following, very, very nice showing in the equities markets today. Of course, the big news today was the fact that Spain's bond sale went quite well. In fact, if you look at the yields that it was giving just 3 weeks ago or 4 weeks ago, it was about 7% down, under 2%. So there is some belief, at least, that the EU is starting to get a handle on the debt crisis, and there is a little bit more optimism in the market. When we take a look at this, you can see this is a tremendous move up, over 12,000 in the Dow now. In fact, on the month for the S&P and the Dow, they're actually back into positive territory. That is quite nice when you consider the kind of moves we've seen to the downside and the kind of corrections we have witnessed. So you can see a tremendous move, a very, very nice rally in the S&Ps. Dollar index. We talked about the fact that as this market came in, we had these consolidating candles. I also mentioned that consolidating candles aren't by themselves a 100% indicator that you're at a reversal, because they'll happen at reversals, but they'll also happen at points of consolidation as the market kind of regroups, gets more steam, and then continues up. And what I mean by that is, if we look at certain areas, for example, as this market went up here, you got these dojis right in this area here, and then of course the market continued higher. So it's not always an indication that it's a reversal, but you will find them at reversal points. So, for example, when we take a look at the market as it came down in this area, it found a bottom and a base right in here. And you can see these consolidating candles before we had this move up. In the same way, when you look at how the dollar has come down, these particular candle types right in here, these dojis, were in fact indications of the top. You can see that here. And of course, this abandoned baby, or what's also called a northern cross, was a very, very strong indication to show you the power of that consolidating candle, the doji candle itself. Incredible candle when you look at it in context of some other technical indicators, especially Fibonacci, especially Elliott wave. In other words, when all of them attempt to line up together, it's a very, very strong indicator. When we go to our March silver, as I said, we're back at 29.53. And when we look at cash, 29.53 also, 52 in that area. What we get in terms of a bottom formation is this is, without a doubt, in terms of a candlestick, it is a piercing line. On a piercing line, you want to get a confirming candle on our daily chart, which this is going to be the following day. You're going to get a higher high, you're going to get a higher low, and you're going to get a long bodied candle, something like this. When you get this type of scenario, that is going to be a very, very strong indication, and we are long at 29.10. We'll probably look to add to that position if in fact we get this follow through candle tomorrow. We'll just have to see. In terms of strategies right now, when we take a look at, let's go back to our daily chart, but this is just in standard format. When we take a look at various areas that are going to be important, what we really want to focus on right now is this last move, which is from the top of B down to the conclusion, because I believe that there's probably one more wave down. And as this comes up, we want to look at a couple of different areas. I would have to say that the important areas are going to be the 23 and the 38. And we're going to go ahead and darken them up just a little bit so it's very easy for us to see. And these are the areas that I really want to look at as potential targets, so that if in fact what we're looking at is the continuation, and we'll know by the way it trades. So we've got, in terms of count, 1, 2, 3. I'm anticipating 4, and then one last fifth wave down. Now, it could be that we only get a 3 count here. How will we know? We will know when it reaches a certain area that it is actually signaling that we did conclude to see here. If we see that retracement, of course, and we see that fourth wave kind of lose some steam and begin to trade lower, we'll look for a full 5 count in the marketplace itself. And a 5 count is what I am anticipating. But we saw a nice move in the marketplace today. We certainly can see that this 1560 area, that has shown us to be very, very strong support. Buyers came in the market, has pushed it off that. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.